The rationale of the mergers is very compelling and very simple. We were lucky enough to be presented an opportunity in early March to combine with Triller. And when we look at our original business and we look at the Triller business, there's one thing that is by far away the most important. It's customer reach. Okay. Do we have a big customer base? Did Triller had a big customer base in the past, now, and in the future? To me, being in business, especially in technology business, the number of customers is important today, and our customer reach going forward is even more important. We saw a very powerful technology embedded in Triller to be able to broaden what they have today and what they will have going forward. So the compounding argument that we look into in this merger is by far away one thing and one thing only, is the customers. And it's now about 7 weeks since we closed our mergers, and our combined team have been very hard at work for almost non-stop. If I can break down the work we have done in the last 7-8 weeks, it went down to about 7 to 8 elements. Number one, by far away the most important, is people. We have a fantastic team already in Triller. It really did not take much for us to take from where they were before in June, July, and where they're going to be in year 2025 and 26. But we are aggressively hiring for some of the best tech giants in the market to upgrade our entire capability of our company. So that's number one, by far away the most important, is people. We are very glad we have a fantastic team already have. We just need to supplement it with very powerful new hire coming into the company. Number two, capital. And we've been very blessed. We have a company that is very well loved by not only ourselves, the management, our existing shareholder, but also by a very wide range of investors who are not our shareholder today. We have been capitalizing that ourselves, as well as with the help of our investment banks that we have engaged. So by far away, number two important work done of our team is capital raising. We are raising capital with one thing in mind. How do we fund our land grab, our hiring, and our innovations, and our growth? And number three is corporate governance. We are a listed company. It's extremely important with the best-in-class corporate governance, from the compositions of the new board, going down to about how we conduct ourselves in travel expenses. And number four, we spent a lot of time in the last couple of weeks really gone back and clean up some of the legacy issues that Triller has suffered from. One of the ones that is quite well known to the public is we do have a number of legal disputes. I'm very happy to report, with the help of our team, we have made excellent headway in settling almost all of the legal disputes. And I like to go into year 2025 without any burden of legal dispute. I think that's very achievable. Another thing that we spend a lot of time on, operating efficiency. Triller is not a startup. Okay, it's very important for me to highlight here. Triller is not a startup. It's almost a 10-year-old company. Like all 10-year-old company, it does have a lot of baggage. It does have inefficiency, okay? And with the help of our team, in the last couple of weeks, we will have tightened up our organization. We have a core team of colleagues who are very devoted to the company, are very visionary to the cause of our missions going forward. And we have reduced our cash burn substantially in the last couple of weeks. And financial discipline, as Mark Carbach mentioned earlier on, is something that we're very focused on. For the first time, we have a lot of flexibility in our capitalizations, in our funding. We are leveraging on that for our growth. And investor engagement is the last point I will talk about, is what we've been doing in the last couple of weeks since the merger has been completed, okay? And we come from the school of management that transparency by far away is most important. We want to make sure the market, the investors, the shareholder know exactly what we're doing and what we are thinking to do going forward. We have a big plan. We're going to be very engaged with our investors here and going forward. And last and not the least are the employee incentive plan. Triller had a good plan before. We're going to make it great. Okay, it's extremely important in this high growth and honestly high stress business we are in. We make sure our incentive to everyone within the company align with the company overall objective in creating shareholder value. So that is my answer to the work done we have managed to achieve in the last 6-7 weeks. Visions of the group bringing together social media, fintech, and financial innovations. When we first looked at the mergers of Triller back in March, April, it was very clear to me one advantage the combined company have, as well as individually the two companies had, were our customer reach. Very quickly in June, our combined team, together with one of the leading management consultant firm in the world, begin to look at what should the offering of our company to all the stakeholders should be. By stakeholder, I mean the fans, the creator, the merchandiser, the advertiser, the service provider that we serve. What will be the most important things we have? It became very clear to us the market lack an everything ecosystems for the creator economy. For a lot of investors out there who were attracted a few months ago by a very important Goldman Sachs report on the creator economy, they're looking for equity. They're looking for stock company they can invest in to plug into this massive and extremely fast-growing creator economy. We want to be a pioneer. We want to be a prime mover in that business. That is why we are focusing in combining social media, social commerce, and financial technology all within one group, all within one umbrella. Next question, specific goal for year 2025 and year 2026, financially and operationally. Operationally, for year 2025, where one thing our entire company focus on is customer growth, land grab. We have a once-in-a-lifetime opportunity available to us in January year 2025. We are devoting every single ounce of our energy, all of our intentions, all of our resources into grabbing customers. Customer growth in year 2025 is in our singular focus. Valuation, any view on stock market, stock volatility, and overall valuation of company? It is, again, given our background in finance, it is not entirely unexpected to see our share suffer from pretty significant volatility and since the merger been completed. Why that's not unexpected? In a normal IPO, you go through a book building process. You go through a process of educating the market, the investors, the research analysts. In a merger like the one we contemplated, we didn't really have the chance, okay? And the chance of engaging our investors as well as the market really did not start until we got approval from regulator that we were definitely allowed to merge. That didn't happen until about 6-7 weeks ago, which is why our team and I have been very hard at work in engaging all the investors, all the research analysts, all the investment bank and fund managers around the world to look into our story. So it was not unexpected for us to see the volatility that we suffer from in the last couple of months, but it has stabilized. And we expect our share price to stabilize and do incredibly well in coming months. A lot of people ask us, what is our expected valuations? And of course, my opinion is biased. If you ask me, I think the company should be valued at least $3, if not $4 billion. I can actually show you all the analysis we have, all the football field, all the cash flow model, all the projection model that can substantiate that. But that's just my own personal opinion. The company should at least value $3 billion, if not more. A lot of people ask us, why don't we do something about the shorting of our shares? Why don't we do something about the volatility of our share price? We believe the best way to counter the shorting is by educating the market of the strength of our company, the strength of our investment story. We just began that journey of shareholder investor engagement a few weeks ago. We have a lot more to come. You're going to see us very proactively reaching out to the market, explaining our investment story, explaining our strategy, explaining our executions. Okay. I'm happy to report we do absolutely monitor our trading behavior on a daily basis, sometimes on hourly, if not by the minute of the day. Okay. And we own a lot of share ourselves. Our employee own a lot of share ourselves. Our major shareholder own a lot of shares. So share price, without a doubt, is extremely important to us. I'm very happy to report we have seen a massive reductions, almost a eliminations of the shorting of our shares in the last couple of weeks. Again, as the market begin to understand our story, I'm very sure the market will love our story and value our company more according to our capability than where we are today. And the last question is, any plan for future acquisitions? We are in a high growth industry. As I've been saying, our company, Triller Group, rely on three things to do well and very well. Number one, people. Number two, capital. And number three, product. How do we plug the gap of our product offering? How do we enlarge our reach of our product offering? We do it two ways. Number one, we organic grow it. We have a large team of engineers here in US as well as overseas. And equally important, we're going to acquire a company in what I call the bulk on investment. So for example, the element in social commerce that we don't have today. We are in discussions with a couple of companies we will acquire to bulk into our company to offer that services. There are certain video capability that we don't have today. There are teams in the area and overseas that we are talking to that may have 10, 15 engineers, including the founder, we might buy and plug and fill our gap and offer the next state-of-the-art offering to our customer. So absolutely, we are extremely product focused. We're going to focus what we have and what the customer need and what the customer do not know they need yet. Okay. And we're going to fill those gaps through both organic growth, organic engineering, as well as acquisitions. Thank you. If there are any more questions, let us know.
And just to echo what Wing Fai said, we are aware that the short selling is something that comes with being a publicly listed company. And we know that the capital markets are efficient. We know that this is something that comes with the overall territory of being a public company. And I think one of the things that we are acutely aware of is that we didn't go public in the traditional way. And as Wing Fai said, we got here by virtue of a merger. And I think we are starting that overall journey now to communicate, talk to people, and very importantly, listen. So we've done a lot of that over the past few weeks and months to understand what the overall concerns are. This is the first step on our journey to communicate with everybody. And part of that comes, we do have to listen. We understand people have different goals from a shareholder standpoint. But first and foremost is information and transparency. And I think we are on the right path here. And the next step is getting the analyst community out there to write about us, to get interested, and use that as a way to grow the engagement with our overall shareholders, which is very important for us.
One thing we do have advantage is, among people in the top team, we have yourself, Mark Carback, we have Yuan Newgov, and we have a number of people who have gone through the trenches, who have spent decades of a career in working capital market, understanding what investors really need from a company like ourselves, okay? As Mark said, very importantly, we have often found in investor engagement, it's very much a two-way street. We explain to the market what we think we're doing, okay, but no one has the monopoly of wisdom. And oftentimes, the investors, the fund managers, the research analysts know more than we do. And they tell us things, they give us advice and help us continue to fine-tune our strategy and our business model and our executions.
Just to add to that last point, we also are very focused on our existing businesses, and we have spent a lot of time talking about our app and the consumer-facing business and everything that goes with that, from software to SaaS. We also need to remember, and we are very focused on our other businesses, so Triller TV and BKFC, which have different growth profiles, different investment cadence and needs. Those are very much a part of our overall strategy going forward and a key part of our growth. And we will look to invest in those businesses in a strategic way, which might include tuck-in acquisitions or investment in people and assets to help those businesses grow and keep critical mass.
Thank you very much for everyone sending in the questions to us in the last couple of weeks. We find them very educational, very productive for us to understand what kind of information you want from us. And many of the questions actually help us refine many of our thinking, many of our executions. And we'd like to hear more from you on an ongoing basis. Please do not hesitate to send your questions to ir@triller.co at any time. And we're glad to have a conversations with you. Thank you.
Thank you very much.